Joining us to talk more about the Fed, Randall Kroszner. He's a former Fed governor and now a professor of economics at the University of Chicago. Mr. Kroszner, welcome. Good to have you with us. I've not had the benefit of being in those meetings. You have. And I'm curious to know, do you think Cyprus came up? If so, how? And how would the Fed governors and members of the FOMC handicap its possible effects on the U.S. economy?
It certainly would have come up. I think of some analogies with Iceland from a number of years ago. Even a smaller country, only 250,000 people, not 1 million people. But it was something that we focused on, we worried about, and we tried to think about what the implications are. Here, it's even clearer that Europeans have made, I think, a terrible mistake in making this proposal that potentially could undermine confidence, and that could have knock-on effects not only for the whole financial system in Europe, but potentially for the U.S.
Randy, one thing that everyone wants to know at this point is how healthy or unhealthy is the U.S. economy? How far off are we from full health?
Alas, I think we're pretty far from full health. We've seen some green shoots in the spring, actually, as we've seen in 2010 and 2011, with a little bit more job growth, a little bit more retail consumption, more stabilization of the housing market, but we still have these big risks. The fiscal follies in the U.S. are not anywhere near conclusion. Europe, obviously, is a risk that's still on the table, and I think there's still some uncertainties about China.
It does feel, Randy, like we've seen this movie before. Green shoots in the economy, trouble in Europe, fiscal follies in the United States. What would it take to change the Fed's view of where the economy is, and specifically change its view of buying bonds or the level of interest rates?
I think we'd have to see some dramatic changes in Europe, in the fiscal situation in the U.S. to make them feel comfortable that there's less of that extreme risk that's going to hit. And also we'd have to see a lot more data that the recovery in, for example, the labor market has really taken root. We saw those green shoots before, a few months of more than 200,000 private sector jobs being created, but then things kind of wilted and never really took root, and the Fed had to do more. I think they're going to be really wary of pulling the punch bowl away too early. They're going to want to make sure that those green shoots are firmly rooted and can probably withstand a Chicago winter.
Randy, you talk about looking at the data. There is so much data that you can examine. Yes. For you, and especially as a former Fed governor, what's the most important piece of data you're monitoring? Is it the job market?
Yeah, I think it's exactly what the Fed has said in their criteria that they're looking at for whether they're going to continue easing or not, which is the unemployment situation or the labor market, as well as the inflation situation. Fortunately, inflation seems to be very well contained. If anything, it's going down rather than going up, and inflation expectations are well anchored. The unemployment rate seems to be slowly moving down, but so slowly that I've been characterizing things as being in a sideways slide for the last year. We've made very little progress, and we need to make a lot more progress before I think the Fed is going to start taking away the stimulus.
Randy Kroszner, thank you very much for joining us. We appreciate you being with us.